Hi everyone, Maria Tyler here. Now we're going to look at restating the balance sheet. So again, this is another nice easy statement. We're really just looking through at separating our assets and liabilities into O and F, so our operating and financing. Equity stays the same, just simply link it back to your original financials. So we don't split equity into O and F, we're just splitting the assets and liabilities. So we have a new accounting equation. Remember our original accounting equation is assets equals liabilities plus equity, or assets minus liabilities equals equity. So our new accounting equation is net operating assets equals net financing obligations plus equity. Or if you have net financing assets, then obviously change the mathematical sign from plus to a minus. So just sort of use a bit of mathematical common sense when you're going through completing your restating here. So it still has to balance is my point. Debits still have to balance to credits. Use your workings area in your spreadsheet to split cash. So that's this area right down the bottom. We scroll right down the bottom of our restated. There's a little workings area and we're going to use that to split our cash. I'll just go back up, click back to my financials. Make sure again that you're linking it back to your original financials. It must be linked. I can't state that anymore. Please link back to your original financials. Everything should be linked back. We're just working completely within our Excel spreadsheets. We entered our original financials in. We shouldn't need to do anything else now. Keep your annual reports handy in case we have to refer back to it for the income statements, but for the balance sheet, we should be able to work solely from Excel like we did with the statement of changes in equity. Now I've put a few checks here. This is more so complete your restating and then come back and you can do these checks at the end. So we'll come back once we finish our, once I've entered the Wesfarmers balance sheet and restated it, come back and show you that these checks do work. So let's get into it. Study Guide Chapter 4, pages 11 to 14 is where you'll find the instructions on how to restate your balance sheet. This is generally the set out. So I've just got that straight from the study guide itself. So this is page 11. Background behind it, showing you Ryman Healthcare's original balance sheet and then Ryman Healthcare's restated balance sheet. And literally all we're doing is separating operating and financing. Now, the financing section usually will be quite small and a lot smaller than your operating assets. Most of your assets and liabilities should be to do with operations rather than financing. So, yeah, and then Martin goes through and shows you again, so the split up. So that's the study guide. This is the set out generally in accordance with the study guide. So we're going to list out operating assets first, operating liabilities, and then take away one from the other to get net operating assets. Then we'll list out finance liabilities and finance assets. And we call these, instead of finance liabilities, we change the word liabilities to obligations. So I put note, we call them financing obligations rather than financing liabilities. And we take them away from each other to get net financing obligations. Now, just a note on this, notice we've put assets first, or assets at the top and then liabilities at the bottom, but we've inversed that here. So we've got financing, so we've got liabilities at the top and assets at the bottom. That's because generally with our financing obligations, we will have more liabilities than assets, but your company might be different. So they might not have any loans or long-term borrowings. So they might have more financial assets than financial liabilities. So if that's the case, that's fine. Just put your financing assets on top. So it doesn't matter, usually we just put on top what the largest dollar value is. So if we've got more assets than liabilities, assets goes at the top. And generally we hopefully will with operating, and generally our loans will be the biggest financial item. So we'll usually put loans at the top, and certainly that's the case with Wesfarmers. So finance liabilities minus finance assets is net financing obligations. Again, this will be net financing assets if you have assets that are greater than liabilities. So just mathematically change the sign if that's the case. Then list out your equity, simply just link it back to your original financials. And then I've put here, make a line for your net financing obligations plus equity or equity minus NFA, net financing assets if you have NFA instead of NFO. So do put that line there. That makes it nice and easy for you to balance that new equation. So once you identify your NOA, your net operating assets, then you can make sure that balances to your NFO plus equity. So if you don't separate that line out, then you're having to go back and try and add those two up. So just let Excel do that for you. So that's how we're going to do it today. Firstly, though, we have to go through, there's two things that we have to do. Firstly, classify these into O and F, all of our assets and liabilities, not our equity. Just leave equity alone. Equity we will not restate. We only restate the liabilities and the assets. And the second thing is we have to split cash into operating and financing. And Martin explains this, I think, on page 11 of the study guide. Let me check. Yes, page 11. Just down here, you'll see this is the section of the study guide which tells you how to split your cash into O and F. And we do have to split that. So I'll show that first after we classify O and F. So I'm going to put OF here because we know we have to split that one into both. So cash and cash equivalents has to go into both. Everything else now, line by line, this is the point of this assignment, to make you familiar with items on financial statements, because these are quite similar between all companies' financial statements. So this whole exercise forces you to go through line by line and familiarise yourself with some of these terms. So if you don't know what the term is or you're not sure, this is your opportunity to learn about it. So talk with your peers, do a bit of your own research online and so forth. I know all of mine pretty much are O, except for a few items of F. So my receivables are operating. Oops, not OF. They're just O. As are my finance advances and loans for receivables. Actually, we could classify that F. Let's do that. So I have a few more items of F, because it is a finance advance and loan. So classify those as F, but my trade receivables are operating. Inventory is operating. Derivatives. Check out derivatives, actually. Again, they could be O and F, depending. So some derivatives are used for operations and some derivatives are used for financing. So just have a look. Derivatives are pretty interesting. Obviously, their value being a derivative, and you'll learn about derivatives in detail in the following course, actually, Advanced Financial Accounting. So derivatives are items basically that derive their value from something underlying, so from another asset or liability underlying, but generally from another asset. So that's where the name derivative comes from. It derives value from something else. In my case, they're operating, but just check them out, and also check out what other means. Other doesn't tell you that much. So in your financial statements, usually in the notes, there'll be a nice note there. Go through and just have a read. This is your opportunity to really familiarise yourself with your financials. So my investments in joint ventures are going to be financing. Deferred tax assets is operating. Taxation is operating. Property, plant and equipment, all operating. Goodwill operating. Intangibles operating. All operating for me. Don't classify your headings and don't classify your totals. They're not items. We only want to classify items. So heading. My payables are operating. My loans are financing. Income tax. These are all operating for me. My loan is financing. My long-term loan. These are my short-term loans. These are my long-term loans. See how there's current liabilities and non-current. You don't need to split them up into current and non-current. In your restated balance sheet, we're splitting them up into operating and financing. So they're the headings we'll have. Provisions O, derivatives O. And that's it. Don't classify your equity. These equity items just link back to the original financials. So now that I've gone through and I've classified O and F, let's do the restating. And first of all, we have to make sure that we split cash into operating and financing. So to do that, I want to show you. So down here in your little workings area, put something that tells your marker that you've actually thought about this. So type something like the consideration of the allocation of cash to operating versus financing. Doesn't matter what you write, just so that the marker knows what your workings are and what you know what your workings are. So first of all, let's link to cash, because that's what we need to split up. So cash and cash equivalents and the figures for each year. Let's put the years in, actually, so we know what years we're doing. Some formatting there, bold and underline. Okay, so we've linked to cash. Now in the study guide, if I just move there, you'll notice that Martin states that we should be referring or splitting our cash based on a percentage of revenue. So generally, Martin would suggest typically between 0.5% to 1% of revenue or sales would be an appropriate level of cash for businesses to hold for operational use. The rest should be to do with financing the asset. So I'm going to use 1% in my calculations. It doesn't matter as long as you use, you can use a different percentage too if you feel like you have a valid justification for it, and write about that in your assignment. In this case, I'm going to follow the study guide, just do 1%. So again, I need to link revenue so that I know actually what I'm taking my percentage out of. So scroll down to your original income statements and do total revenue. Oops, wrong figure. Need to do, so I'll link it to the word revenue. And let's link it to this revenue because it's out of my total operational revenue. So this is my operational revenue and this is my finance revenue. So I'm just going to link it to my operational revenue. Now, firstly, these are dollar figures, by the way. So what we want to find out first is our cash greater than 1% of my revenue. So let's take a percentage of cash. So cash divided by revenue and hit the percent button, and that will make it into a percent. And I want to see some decimal points. So that'll do, 1 decimal point's fine. So in this year, my cash is actually less than 1%. So really, all of the cash in that year would be used for operational use, because up to 1% of the revenue should be used for operational purposes. So in this year, it's not even 1%. So in that year, so I'll just put here, this is percentage of cash out of total revenue. No, out of, say, operational revenue. Then let's put, this is our allocation of cash to operating, and this is the allocation of cash to financing. So in this year, we're going to have 100% allocated to operating and nothing to financing. But in every other year, we're just going to allocate my 1%, so 0.01, so 1% of revenue, not cash. 1% of revenue should be allocated to operating, not more than 1% of revenue. So I'm going to put 1% of revenue. Let's just fill that across, except for that year, because we know that year is not more than 1%. It's only 0.9%. This year was more than 1%. This year was more than 1%, just. And this year was more than 1%. So in those years, we want only 1% of revenue to be allocated. 1% of revenue out of cash to be allocated. The remainder of cash, so we start with the original cash balance, take away what we've already allocated to operating. The remainder can be allocated to financing. And that's how we allocate our cash between O and F. So here's our allocation to operating and here's our allocation to financing. What I've done here is simply allocated no more than 1% of revenue to operating, and the remainder of my cash I've just allocated to financing. So again, these two figures, if you just sum them, should equal your original cash figure. So that's your check. So make sure that that figure there lines up with that figure there. That's your little check to see that you've allocated your cash properly. Where is it? There it is. Okay, so what we're doing is allocating our cash amount between O and F, and here's how we've done it. These are just to show our marker, our workings of how we have done that. So we firstly checked to see if our cash really is greater than 1%. If it is greater than 1%, which in my case was in those 3 years, then we've only allocated the 1% to operating, and the remainder of cash gets allocated to financing. So this is good now. We can simply link back to this later on. So that's, basically the only thing we have to do before we start our restating. Now go back up to our balance sheet and simply start restating. So we're going to list it out. Remember our slides. We're starting with operating assets. So this is how we're going to set out our restated balance sheet, just in accordance with the study guide. So operating assets, and then I'm going to link. So everywhere I see O, I'm going to do a link. O, go down, don't link that one, link these three. So I can just fill those three down, fill without formatting, so I don't stuff my formatting up. Take the formatting off this. And let's link those figures. So my cash, now my cash I had to split up between O and F, and I've done that. So I simply just link, I'm doing operating. So I want to link to my operating cash. Link it there. How easy is that? And then don't worry about it. Now we can link back to the rest of our figures. Only the operating. So once we link 2017s, we simply fill the rest across. Our inventories is operating. Now I can actually fill these three lines down because they're subsequent to each other. Okay, maybe not. See that? No? Alright. It's alright, I can fill. Just trying different methods of making this quick and easy. Okay, so my operating assets. So keep going. That's my operating current assets. We don't need to we don't need to worry about the split between current and non-current. Just keep going down. Anywhere I see an O, link it. So pretty much I'm going to link now for the remainder of my assets. They're all operating. There's only 1, 2, 3 assets that aren't. I'll just link those down. Fill without formatting. Now where's my... Don't need my totals. Don't need my totals. All right, so stop there. So if I'm going to link from my deferred tax down to other, fill without formatting. And fill it across. So this is as hard as it gets. Pretty easy. Simply linking back. See how if you link it, it makes life so much easier. Oops. Trying to get my formatting off. Alright, so that's all my operating assets done. So I'm just going to put a total now. Total operating assets. And equals sum. Now it's important that I do total these because that's one of my checks that I've done it right. If I've made an error, it makes it really easy for me to identify where that error is. So it's important that I do these little checks. Okay, so that's my total operating assets. So if we flick back here, that's that done. Now I'm doing operating liabilities. Put a heading in. Operating liabilities. And anywhere that I've got an O in my liabilities, so let's go down. Here's the first one. I'm going to link it. So where's my O? My next O. Don't link this one, so now I can link for the next 4. 1, 2, 3, 4. And I fill without formatting. We don't need the bold on those, and we don't need the italics. Okay, so my trade payables is operating. Fill that across. That doesn't need to be bolded. Income tax is operating. So if you've done your original financials right, this part is very easy. Just simply linking it. And if you've made a mistake, the good thing about linking it here is if you've made a mistake in the original financials, you just go fix it up here and it flows through automatically to everywhere that you've linked it. So that's really cool. Okay, keep going. That's my current liabilities done. My non-current liabilities, so I don't want to link that. I want to link my provisions and the 2 underneath that. Fill without formatting. So my provisions, so I've got 3 operating, my provisions, derivatives and other. Just literally linking the entire lot. So easy. Okay, so that's all my operating liabilities. So I can just do total operating liabilities. Okay, and that will just be the sum of all of those. And again, it's important to do a sum here because it's one of our checks. A little bit of formatting. Okay, so now I've put my operating assets and my operating liabilities. What do I have to do? I have to take one away from the other and call it net operating assets. So here we go. Net operating assets, and I want you to put this acronym in afterwards because that will make it easier for you with the next step when we do ratios. So put these acronyms in, and the formula was assets, so operating assets minus operating liabilities. That's my net operating assets. Fill that formula across. Okay, now what's the next step? Go back here. Financing liabilities, but we're going to call them financing obligations. So with your company, just check, have a look at the dollar figures, go back to your financials and have a look and just see. Let's have a look at my financing obligations, which is under liabilities, my finance liabilities. 1347 and 4066, that's pretty big amounts. Let's have a look at my financing assets. Yeah, so my obligations are bigger than my assets. So have a look at the amounts of your Fs and see, you might have greater assets than liabilities, in which case put your assets first. But in my case, I've got greater obligations, so I'm going to call it financial obligations. Put mine first. And anywhere I see an F in liabilities, I'm doing my liabilities first. So I've only got two, one here and one here. My current loans and my non-current loans. So actually I'm going to combine them into one. You don't have to, but I am, because they're both the same thing, and we don't need to know the split between current and non-current. These are my loans due within 12 months, and these are my loans due in a period greater than 12 months. We don't care in terms of restating, we just want to know that they're operational items, and because both of them are, I'm actually going to add them. So I'm just doing, I link to that cell and then put a plus sign and then link to that cell and press enter, and that adds them for me. Now you can keep them as two individual lines here, it doesn't matter. The important point is that those figures are in and you haven't missed them or you haven't double counted them. Okay, so that's all my financial obligations. So total financial. Now you might have more than one, but I've only got one, so my total's literally going to be the same. Okay, so that's my financial obligations. What am I doing next? Financial assets. So I think I only had a couple of those as well. Let's type the heading in. Financial assets. Now, don't forget cash. Cash, if you split your cash, you will always have cash as your first financial asset. Remember, you've got F up here. So cash needs to be split, and you don't link to your original financials, you link to the F component down here. So your allocation to financing is where you link to. So nice and easy. See, it makes life easy if you do a bit of preparation. So that's my first financial asset. What's my next financial asset? Receivables, finance, advances and loans. And then I had one non-current here, my investment in joint ventures. So my receivables and loans, link that to, where is it? Here, there's actually nothing for that year. That's all right, still link it anyway. And investments in associates and joint ventures, link that there, drag them all across, do a bit of formatting, put a total in, total financial assets, that's what I want to call it. Actually, let me format painter that. No, that's not a good idea. There we go. And do a sum equals sum of my financial assets. Bit of formatting, make it all look nice. Okay, so I've got my financial obligations, which are actually bigger than my financial assets. So if you've got the reverse, make sure you reverse them. And now that's going to give me my net financial obligations. NFO, put the NFO in so you know. And that's simply my bigger liabilities minus my smaller assets. Financial liabilities minus financial assets. Now I need a few extra lines in here. Look at that, the formatting's a bit dodgy anyway, so let me just fix that up. Let's paste it all white first. Alright. Okay, whoops. Now I've got net financial obligations. All I have to do is the easy part, just copy and paste equity. Just literally link it. I would probably even link the heading. Link everything for equity. So I've actually finished restating my balance sheet, just making it tidy now. Just link the rest in. Delete the last few lines to make it nice and even. Okay, so from issued capital, I'm going to just link it straight in. Equals sum, just to check, instead of linking my original financials. Okay, let me just correct my formatting so it looks a bit pretty. Put a bit more formatting in. Okay, so, oh actually no, it's going to stuff my formatting. It's alright, put that as a heading. Okay, now my last job is to make a line for NFO plus equity. So I literally type in, let's put total. NFO plus equity. So again, if you've got NFA, it'll be taking away your equity, or equity take away your NFA, whichever is greater. Equals my NFO, which is here, plus equity. This is my big check to see if my new accounting equation balances. Okay, so scroll up till I see NOA up here. 28321.6, does that match down here? 28321.6, that's great. So I really want to see that this line here balances with this line here. That's my check for this. Have I balanced the accounting equation correctly? If I have, yes, yay, you're done. If you haven't, go back and do the checks that I've showed you on the slide. So here, we said here's some checks. Operating assets and financing assets. Go back and add those two up. So go back and add the total of your operating assets. Remember we put a total in here and I said it will be used for a purpose later. This is it now. So if your balance sheet new equation doesn't balance, go back and add this figure, the operating assets, plus your financing assets figure. So total financial assets. So add this figure plus this figure. So my sum comes to 40,115, and go back and see if it actually matches to your original figure for total assets in your original balance sheet. So 4115. Mine does, obviously, and I know it balances, but that's your check. If it doesn't, then you've missed out an item or you've double counted an item. So if it doesn't match, this is your first check. You know that you've done something wrong with the assets in your original financials. Somehow you've transferred the assets across wrong. Then go and do the same. So if that does balance, then go and have a look at your operating liabilities plus your financing liabilities. So again, go back to your restated financial statements and your operating liabilities, this figure here. Go and check that plus your financing obligations. So this figure here plus your total financing obligations, those two. So mine's 16,174, matches to your original figure for total liabilities. So mine does, again, because I've done it correctly, so 16,174. And again, that's your check. If it doesn't, then you know you've transferred your original liabilities across wrongly. You've split them, or you've forgotten one, or you've doubled up on one. Then also check that your equity matches that in your restated comprehensive income statement of comprehensive income equity. So let's go and check. So here we go. Total equity here, 23,941. Does that equal the balance in my statement of changes in equity? Yes, it does. So closing balance 23,941, 22,949, 24,781, 22,949, 24,781, and 25,987. So again, that works as well. So that's it. That's your restated balance sheet completed as well. So now we've only got the income statements left to restate. See you for the next video.